Today in crypto, American regulators are coming down super hard on the Bitcoin derivatives exchange Bitmex, which has spooked the market and raised a lot of questions about just what the heck is going on and what this could mean for the industry. Well, Bitmex, as I guess an exchange, has been losing market share all of this year. It does still remain one of the top 5 derivatives exchange. Well, maybe not after today, but currently they're sitting on 193,000 Bitcoin. That's all customer funds, or mostly customer funds, leading to the speculation, well, what's going on with that Bitcoin? Is that Bitcoin going to be safe? I'm going to break down this story for you, as well as what it means for the wider industry. So even if you're not a Bitmex user, this story has a lot of big takeaways for all Bitcoin holders. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild end of crypto. Okay, so let's go ahead and take a look and see what Bitcoin is doing today. So obviously it dropped on this news. It is being indicted by US regulators, down 4.6% on that news. And of course, there's a lot of uncertainty around that event. So we could be in for a bit of a shaky weekend depending on how everything plays out. But we did finish the day still above that very big area of support at $10,500. This current price move hasn't even knocked us out of our symmetrical triangle yet. So it's really not that dramatic. We're still just basically bouncing around inside of this formation. And again, this particular formation, it doesn't have a strong bias in either direction. So it could be bullish or bearish. It just shows that we're coming to this point where the market's just coiling up, getting ready for some moves. I feel like we're back at a point, though, in the market where we are just kind of, it's a bit of wait and see, but a breakout should be coming in the near future. And in spite of some of the possible negative catalysts that we could see playing out in October, I do maintain an overall bullish bias on this market. Just check out this chart here showing Bitcoin hodlers. 63.3% of all Bitcoin has not been moved in a year, meaning that Bitcoiners, by and large, are buying Bitcoin, putting in their cold storage, they're holding it. They have no interest in selling Bitcoin around $10,000. These prices just don't interest them. That's very impressive. And just to really highlight how powerful the market is and how strong Bitcoin is right now, just in the last 7 days, we have had Bitmex, one of the biggest margin trading exchanges, be indicted by US federal regulators. And KuCoin was hacked for around $200 million of the crypto. And you know what happened? The market barely moved. There's no big 30% dump, just a little bit of market action. Nothing crazy. That's impressive. That shows a lot of strength in the market. And Bitcoin is also still over $10,000, extending its record run of days over $10,000. This is all bullish for Bitcoin, guys. All this noise and drama and stuff doesn't really take away from the big picture. A big thank you to CRYPTODOTCOM for sponsoring today's episode. The next syndicate event has been announced for October 6th. You will have the chance to score some banned protocol at a 50% discount. Now, to be eligible, you're going to need to have some CRO staking on the exchange and to also meet some minimum trading requirements. If you still do need to get a Crypto.com exchange account, then you'll find a link for that down below in the description. Crypto.com is also running a super cool promotional giveaway at the moment. Basically, they're giving away a bunch of really cool Apple gear, including new iPhones, iWatches, iPads, so very cool giveaway. Winners will be randomly chosen from anyone who stakes at least 1,000 CRO tokens on the app. So of course you can just go and up your stake to be in to win if you're already staking CRO tokens, but this is definitely awesome news for those who are interested in getting themselves a debit card. Because for 1,000 CRO, which costs around $150 at the moment, you can get the Ruby Red debit card, which will give you 2% cash back rewards and free Spotify, and 1 entry to win some of that sweet Apple gear. And if you sign up using the link down below in the description, you will also get $50 in free crypto credited to your account after you reserve your card. That's a lot of cool perks. And if you reserve a higher tier card like the Jade Green card here that I have in my hand, then you will get 3 chances to win Apple Gear plus extra perks like free Netflix, airport lounge access, and premium lending rates. So if you don't have one of these cards yet, then it's definitely a good time to be checking it out and to grab yourselves one. So let's start off by talking about Litecoin. The much anticipated Mimblewimble upgrade is going to bring privacy to Litecoin, has finally gone live on the testnet. Well, it's only on the testnet. It's actually a very limited testnet available only to developers at this point, but this is progress. This is moving forward. It's an important step in moving us closer to the reality of a privacy-enabled Litecoin on the mainnet. If all goes well during the testnet, then we can expect Mimblewimble to go live on Litecoin's mainnet sometime next year, although of course there are no dates set in stone yet. Big news as well for Cardano fans after a recent discussion between Charles Hoskinson and Ben Gortzel of SingularityNet. It appears that Singularity is going to be migrating over to Cardano when smart contracts go live on the network. Ben cited the high costs and lower speeds on Ethereum as a reason to seek out an alternative. Now, it's not decided if it will be a complete migration, that is all the tokens moving over, or simply a partial migration where you'll see Singularity existing both on Ethereum and on Cardano, potentially even filling different use cases on both blockchains. But it is exciting news to see a high-profile dApp like Singularity making this announcement, intending to move over to Cardano. And the final bit of news for you is that APY Finance has opened up for liquidity farming. Now, APY uses smart contracts to basically route your funds to a portfolio of kind of the best yield farming strategies, kind of something similar to what YFI is doing. Farming it now, since they've just opened up for farming, gives you a chance to get your hands on some platform tokens. So if you are interested in grabbing some of those, it's a good opportunity for you to earn them without having to buy them. You just put your cash up to farm. Also, this is backed by some really big names like Arrington Capital and Alameda, so it should be quite successful in the long run. Now let's get on to our big story of the day. The United States Commodity Futures Trading Commission, or the CFTC, and federal prosecutors at the Department of Justice are charging crypto trading platform Bitmex with facilitating unregistered trading and other violations, including money laundering. Yeah, they probably are money laundering, but it's a big story, though. U.S. regulators, they've had a pretty big few weeks in terms of cracking down on cryptos. We saw Salt Lending had like a $43 million settlement. Abra's been getting hit. Kick, they got in big trouble. Tether, still under investigation. And now Bitmex, boom, on the chopping block as well. Now, in response to the news, of course, Bitcoin took a 5% dip for some reason. I mean, who cares about Bitmex anyway, man? It's just a centralized exchange. But does this mean that Bitmex is going to shut down? No, it doesn't. Arthur Hayes, the CEO, he is in Hong Kong, which, by the way, has no extradition treaty with the United States, so not really much in a practical sense that the United States can do to actually shut Bitmex down, although American authorities have arrested the CTO of Bitmex, who happened to be in Massachusetts, so bad news for that guy. Now, is it a problem for Bitmex's 193,000 Bitcoin? I also don't think so. The money would simply, it'll flow to another exchange like Binance or to Bybit if Bitmex really does get into big trouble. But there's definitely been a lot of FUD floating around regarding that 193,000 Bitcoin, because a lot of that Bitcoin, it's customer money. Yeah, sure, some of it's like the insurance fund and stuff like that too, but it's mostly customer money. The fear is that the US government may seize Bitmex and thus seize user funds. But again, I don't see this as being particularly likely to happen. Arthur is in Hong Kong. So even though the CTO is arrested, user funds should be just fine. I suppose the proof will come in a few hours when Bitmex processes its daily withdrawals and probably like half the Bitcoin or more is going to flow out of Bitmex. It's going to be probably pretty dramatic. But I do have some interesting takeaways from this story, as it really got me thinking beyond Bitmex and what happens to them. And I don't think anyone really cares what happens to Bitmex. But the first is that the Bitmex story serves as a simple reminder that if Satoshi is not dead, that he would be arrested. In fact, maybe Satoshi is already rotting in a jail cell. Maybe that's why he hasn't done anything with his million Bitcoin stash in all these years. It would be extremely dangerous for him to ever emerge if he was still out there, and I think this proves that. The second takeaway, of course, is the mind-blowing hypocrisy of regulators. I know the hypocrisy doesn't really surprise us, but just it gets under my skin anyway. JP Morgan was just convicted again for rigging the markets again, only days after it came out that they were laundering money for dictators, oligarchs, cartels, and terrorists. They got, that as well. It's insane. And you think Jamie Dimon is going to have to go to jail for that? Oh no. And hey, by the way, Jamie, we haven't forgot about that ship full of cocaine. Man, what was up with that? And of course, as the cherry on the cake, while JP Morgan was busy giving insider deals on the PPP loans, not small businesses that actually needed them, but big businesses that didn't need them, insiders, employees, about 500 JP Morgan employees, in fact, personally took money from the government, from those PPP loans, and put it in their own frickin' bank accounts. Because of course they did. Business as usual at JP Morgan. You would think at some point that the executives overseeing this rampant criminal enterprise would be held accountable for anything except just occasional slap on the wrist. Bad, JP Morgan, bad. Give us a little bit, give us our cut, basically, is what the government says. They're simply too powerful. JP Morgan, it's the mafia that made it. It's gross, but that is what it is. Bitmex's big mistake was that they forgot to buy off some politicians in the US. You gotta pay your bribes, guys, or you get in trouble. Another fun takeaway from this whole thing, it's insane that in the USA, you can go down to your local corner store, put your entire life savings into the lottery, and you have a 99.99999% chance of losing all that money. But as an American, you are banned from buying ICOs, you're banned from early stage investing in IPOs, unless you're a sophisticated investor and you get accreditation, you're banned from leverage trading. That sounds like freedom to me, guys. That's crazy. And perhaps the most important thing for us to ponder from all of this is that this could be a first step towards cleaning up the crypto industry. Like it or not, and definitely got mixed feelings about it without a doubt, regulation is coming in a very serious way for the crypto industry. And all centralized platforms, including more centralized wallet services, are going to need to have to put in mandatory KYC, strict KYC. The FATF travel rule, it is being implemented. It's being implemented right now, and it's only going to get stricter. There's a big push right now towards shining a light in all of the dark corners of the crypto market, and we're going to reveal some nasty stuff. And as a final thought, in the long run, the slow demise of those shadier centralized players, it's really not even going to matter at the end of the day, guys. All of the relevant derivatives markets, they're already starting to see movement into the decentralized world. We've seen a 70x increase in volume for decentralized exchanges. Now that's mostly spot volume, but they did in fact as well do $22 billion in volume in September on decentralized exchanges. So it's coming. It's coming, and that's maybe the next regulatory hurdle for us to discuss. But derivatives right now, they only make up a tiny percentage of the decentralized exchanging space. We have DYDX and synthetics, and they're already offering some of these services. We do have newcomers as well, like Injective Protocol. They're going to bring derivatives to layer 2 and really break open the entire market for low-fee, high-speed, decentralized trading. Regulators at a technical level are not actually going to be able to shut these things down. They can try to block IP addresses and stuff like that, but that's about it. This Bitmex thing, it's just the first regulator scare of the bull market. That's my feeling on this. There's going to be more of these regulatory scares to come. Just keep calm, carry on, keep on stacking those Satoshis, guys. That's all we got to do. Anyway, your question for today. What do you think about this Bitmex story? Does it matter at all for the big picture of the crypto markets? Is it a good or a bad thing? Does the increased crackdown by regulators worry you? What are they coming for next? Or was it just Bitmex's time? Did they make the cardinal sin of letting Americans in the early days, and therefore they're guilty? What are you going to do? Anyway, let me know down below in the comment section. Thank you for watching today. Long live the blockchain, and peace out till next time.